Our next company is another diversified miner, Vedanta, listed in London. Had its roots, of course, in India, but it's a major player both in India and particularly Africa now. And I'm delighted to say that we have the chairman here this morning to speak to you. Tom Albanese is no stranger to this industry, of course. Most people will remember him from his days as chief executive from 2007 to 2013 of Rio Tinto, another major diversified mining company. So I'm delighted to welcome Tom to the stage. He has indicated that he will allow some time for questions. So if you do have if you do like an opportunity to talk to one of the industry's leading players, please come forward with or put your hand up with a question, and we'll try and we'll have 5 minutes, hopefully, of Q&A at the end. Tom, thank you.
Well, thank you very much. Again, I've been here before, and this is really exciting to be here today. I've been in a full-time role with Vedanta since September. I've been thoroughly enjoying myself. I've been making the rounds to almost every one of the businesses around the world and in India. I've been spending more than half my time in India since September. I'm taking an apartment in Delhi, and my main office will be in Delhi. I've really enjoyed the team. It's a very, very sharp, energetic team. They want to be the best in the industry, and they're going to do whatever they need to do to be in the best in the industry. I'm going to be there to help them. So it's, again, as I see it, it's a strong Indian company with clearly a global footprint and clearly a vision that in the future we're going to have emerging markets. The theme of this conference, emerging markets with billions of people that do want to consume a better life. They consume more energy, consume more metal, and we'll be there for them. Clearly, I know a lot about what a globally diversified major would be. And you might look at that tagline there and say, well, that looks aspirational, maybe even a touch of irony. But as I've gotten myself involved with the details of the business, spoken with the engineers, the financial people, the geologists, and looking at the potential of the business, I can actually see that this is a very strong collection of businesses, many of those businesses likes of the BHPs, the Rio Tintos, would love to have. And that's what I'm really here to talk about today. I'll talk a little bit about the range of businesses of Vedanta, but I want to focus on Africa. There is a group of tier 1 assets, and I want to start with oil and gas, because first of all, you wouldn't think of oil and gas in the Vedanta portfolio. But over the past several years, through the acquisition of Cain, India, and the development and the continued growth of Mandala Field in Rajasthan, we have grown to be one of the top 20 global independent producers of oil and gas. And again, it's mainly oil, and it's mainly onshore. So we are situated in an enviable situation of producing roughly 200,000 barrels of oil a day plus, lifting costs of under $5 a barrel, a clear generator of cash flow, and even a clearer generator of new opportunities for further exploration and development potential. It's right there in the market for India. It's producing about 25% of India's domestic production. If you look at the domestic or the fiscal situation in India, you'll see that one of India's greatest fiscal challenges is its reliance on overseas oil. So there's clearly a market in India for Indian oil. And I think that the Rajasthan asset's a great place to be. The second big business would be Zinc India, and this is Hindustan Zinc, and this is a majority shareholding in a public company in India. It is the largest integrated zinc producer in the world. It's in the first quartile, and it also produces a very significant byproduct of lead and silver. The bulk of the production right now is open pit, but it's going to be evolving into a very substantial underground producer over the next 3 to 4 years. And of course, with the zinc, you have the silver, which is the fourth of the rows. Zinc International would be here in South Africa, in Namibia, and in Ireland. And these are the assets purchased from Anglo several years ago, their zinc business. I've had the opportunity to visit Black Mountain, which I'll talk about a little later. And just this weekend, I had the opportunity to go and visit the Scorpion Mine in southern Namibia. And I'm very, very pleased with what I've seen. Also, the opportunities to extend both the lives of those businesses, but also to grow that business. The next two businesses I would put in the category of, next three businesses really, category of having a lot of potential, but also needing some work to do. The first one would be our iron ore business. We are the largest iron ore producer in India when the Indian government allows us to produce iron ore. So again, we are now in a position where we have to go through the regulatory and court position so that India is allowed to produce from Goa and export the iron ore from Goa. I've actually been on the ground in Goa, and I've had a chance to talk to some of the geologists there, and I have to say I see a lot of geologic similarities there to other parts of the iron ore business, which I don't need to mention at this point. Moving on to, also as we talk about iron ore, I'll also talk about our Liberian asset, which is a very important part of our overall iron ore strategy. Moving on to Zambia, and I'm heading up to Zambia this evening, and I'll have a few slides to talk about on that. This is a very long-standing business, 70 years old. It's the largest private employer in Zambia and a large, important portion of the Zambian copper belt. And again, right now, as you can see in the chart, it is a fourth quartile producer, but it's something that I see over time that we can improve that business. And again, if I were to look forward, I'd say there's at least another 70 years ahead of it as we make those efforts to work with the government and make those efforts to improve the business. And finally, in aluminum, we produce about 750,000 tons of aluminum right now, on the way with pot lines almost ready to go to 2.3 million tons. Right now, it's a second quartile producer, largely with the benefit of the competitive smelter situation in India, the valuation of the rupee, but we're also faced with the need to import bauxite. So I think the real challenge for that business is actually solve the supply chain, get some of the bauxite, very strong bauxite resources in Orissa, but also very, very important stakeholder challenges that we have to respect and we have to find pathways for, but a large global resource in Orissa that we just have to create a aluminum feedstock for those individual smelters. But as you can see from this chart, the bulk of the assets are first quartile. There are some in the second quartile, and you can see that there's one in the fourth quartile that we will work toward improving. I think if you were to look at our revenues and our EBITDA, you'd see our overall margins are right there with the best of all the majors in terms of EBITDA margins over revenue, well over 40%. We do have a strong commitment to Africa. It's been a long-term commitment, and from my perspective, you don't need to convince me that the importance of investing in Africa. Some of the greatest resources in the mineral industry have been in Africa, and some of the greatest exploration opportunities for the future will be in Africa. So again, I think as I see the trajectory of African mining industry over the past 10 years, and most importantly, how many countries in Africa have worked very hard on their own governance, on their own strengthening of the rule of law, and their own work toward attracting foreign direct investment. I do see that Africa should be a vector for foreign direct investment. It should be someplace that we should be, as Vedanta, focusing quite a bit on our own future investment. We have operations through South Africa, as I said, Namibia, Zambia, and Liberia, and I'll spend a little bit of time talking about each of those. In total, about 19,000 employees that are working for us in Africa. First, let me start in Zambia and Konkola copper mines. Konkola copper mines, as I said, it's been around for about 70 years. Very important part of the copper belt, very important part of the economy, historic and present and future of Zambia. We are the largest private employer in Zambia, and we do have to respect that the importance that we place on the economy of Zambia and the symbiotic relationship between Konkola copper mines and, again, the economy and the government of Zambia. This is an asset that has historically been underground conventional mining and is now rapidly converting to mechanized mining and trackless mining. We have spent over $2 billion since 2003 in terms of completing the Konkola Deeps, which again many of you will know was an asset or an idea on the drawing board for over 20 years that Vedanta went ahead with, and also the construction of a state-of-the-art smelter and state-of-the-art concentrating and power assets. So quite a number of upgraded surface facilities, quite impressive surface facilities. Now what we've got to do is we've got to bring the underground facilities, the underground capabilities in line with that surface capacity. I've been spending a lot of my time personally meeting with ministers and officials within the government of Zambia, recognizing the importance of KCM and the government of Zambia and all stakeholders to working together for the common solution. We are the largest foreign direct investment in Zambia, and I think everyone would recognize, all eyes would be on how well we can do and how we actually create our path and our pathway forward in terms of bringing KCM to the potential that really I believe it is capable of being. We've had operational problems and operational challenges in Zambia. We have not gotten the production up to those numbers that we thought we'd get up to, or that what we had put into the market. Over the past year, we've been, I think, tempering those expectations properly. And as I've been putting my own eyes on the business and the trajectory going forward, my own view is that we have to continue to temper the expectations for where we're going to be, but then absolutely commit to delivering on those expectations. So this is really not about nothing fancy. This is going to be no rocket science here. This is going to be about the nuts and bolts of underground mining, of equipment maintenance, of ensuring that the backfill cycles are working, ensuring that we're getting the development footage that we need to get going, so it keeps up with everything else. I've been pleased actually over the past couple months with the fact that there's been a very, very strong focus on cost control. And so while we haven't yet been seeing the tonnages rising to where we need them to be, I think what you've been seeing, and you certainly see with the numbers, would be that the costs are being held in line. So we're beginning that turn, and that's really what we need to do, is begin that turn, which I think will lead to a stronger performance on a going forward basis. I'm heading up there tonight. This will be my 4th trip up to KCM just in the past 4 months, and I think I'll probably be spending quite a bit of time with the team on a going forward basis. Certainly we're going to be working very hard at building some of the skills, building some of the capabilities, and I'd see some, again, really, really strong underground operators coming into that business, and a strong commitment from management and a strong commitment by the company to support them and to give them all the resources that they need to turn around the business. We had a call with our results last week, and I think one of the questions we would have gotten is, are we committed to Zambia? Are we committed to KCM? And let me answer that very clearly. KCM is a very important part of Vedanta. Vedanta is committed to the future success of KCM, and I do see it as a long-term part of the business of Vedanta for many, many years to come. But we have a lot of work to do, and certainly that's going to be a big part of what I'm going to be doing with the business. Moving back to South Africa. I've had the opportunity to visit Black Mountain and some of the projects around Black Mountain. Again, this business has been good for Vedanta. It's been delivering good performance. It is a relatively short life if we do nothing. With the original pit plans and the original underground plans scheduled for a 2015 finish. We've extended to 2018, but as we look particularly at the Swartberg nearby resource, I would be very comfortable in saying that's going to add at least another 10, 15 years of life to the business. We're currently going through the feasibility, pre-feasibility work. I've been involved with the team in terms of ensuring that we can drop that capital cost in order to improve the economics to get that in. And I would say between Swartberg in the nearer term and then maybe the intermediate term, looking at the right capital solution for the other resource, I think we will be in a position to again look at not only extending the lives but certainly growing that business. I've been very comfortable with the engagement with the stakeholders. I've met with the union officials on the site who share also the same interest in having an extended business, extended period of employment. We've seen strong support for the government of South Africa. And I've been actually particularly pleased with some of the work being done on the ground in terms of working with NGOs and working in terms of the protecting and preserving the unique biodiversity in the area. So again, I think this is a business that I like what I see. and I'm sure you're all going to like to see the results over in the future. Moving north to Namibia and southern Namibia, again, the Scorpion mine, this was a mine that, again, has a relatively short mine life. It's an oxide zinc deposit feeding a refinery that's driven off of oxide ores. Within the area, there's a fair amount of exploration potential for sulfidic type deposits. So I think the pathway for Scorpion over the next few years will be finding the right solution, probably putting a roaster in advance of the current refining complex so that we can be developing the massive sulfide resources in the area. It's a nice band of chain of volcanogenic massive sulfides that I think we would be able to position for. And again, I met with the employees of Scorpion this weekend, the union. I've met with senior leaders within Namibia, and I've also met with stakeholders. They all express a strong support in working together to find a solution for extending this business. It's an important part of Vedanta's business. It has been generating good cash flows and good profits for the business, and I think it's actually been good as part of a regional component of the southern Namibian business sector. Moving on to iron ore and oil and gas in Africa. We have a magnetite deposit, the western clusters, which had been mined back in the 70s and 80s in western Liberia. It's connected by road. It's connected reasonably well to infrastructure and the seaborne markets. It is magnetite. It will require grinding, but the grindability index of the magnetite is actually reasonably attractive compared to some of the other magnetites in the area. So again, we've been working, we're in an engineering mode, working very closely with the government of Liberia to create a phased approach. And again, because it had been mined in the past, again, because it has road access and has components, I think that we can come up with relatively capital-friendly early phased approaches so we can begin to test the market, we can begin to get some tons in the market. It's a very large resource in total, and then as the infrastructure develops, as the business conditions in Liberia continue to support additional infrastructure capabilities, and again, as we see the iron ore markets prepare themselves for more iron ore, I think that this business can be there to provide that iron ore into the seaborne markets. We've been doing quite a bit of drilling there, and again, the engineering team is well in hand with the first phase of activities. And finally, we do have some oil and gas offshore in South Africa. We've run some geophysical surveys last year. They'll be followed up with some additional geophysical surveys during the course of this year. I was involved in a session yesterday about how you had to work with communities. You had to not wait for them, but you had to anticipate, you had to plan in advance for the total footprint effects of a mine business and a mine operation in whether you're in Africa, whether you're in Asia, or anywhere in the world. And that's, again, as I've been making the rounds through the Vedanta business, I've been seeing some good work on the ground, particularly in the area of creating infrastructure around hospitals, around schools, around providing food, particularly in India, and again, helping sustainable livelihoods in and around the operations. There is work to do. I think if I were to say one thing that is probably the most critical that needs to be improved dramatically in Vedanta, it's improving the safety. We have way too many fatalities, and these need to be eliminated. And those of you who have been around me, whether it's with Rio Tinto or certainly now with Vedanta, will know that I have a personal strong commitment to safety and ensuring that we eliminate all the accidents. Elaine Dorward-King, your comments in Newmont were just right on board with the way I think about this. We do have work to do in this particular area. And we will do more in terms of engagement. We will do more in terms of creating stakeholder solutions as we chart our path forward. So finally, we do have some key strategic priorities. These include low-cost production growth. These include increasing free cash flow. We've got to work to bring down our debt to some extent to give us more firepower for the next range of opportunities, whether they are organic opportunities or M&A. Those of you who know me know I'm quite interested and passionate about exploration, and I do intend to continue to take those exploration interests, capabilities, and the strong resource position in and around the resources of Vedanta to grow that next generation of reserves and resources. And finally, I think as we've now completed the Sessa-Sterlite merger during the course of last year, I do think we can create some more opportunities for synergies between some of the businesses working together so we can actually create a stronger Vedanta at the end of the day. Thank you, and I probably have room for maybe one, maybe two questions. So question not from the floor.
Maybe I can just ask one quick question on silver. It was part of your presumably most of your silver is byproduct from your zinc operation, so you don't produce any primary silver.
Yeah, that's right. Our silver would be coming predominantly from Hindustan Zinc's zinc operations. It's always been a strong silver byproduct. It's interesting because when I went out there for the first time in July, I went out to some archaeological sites where back in the year 1000 BC, they were roasting this material and going through basically a distillation material to get the lead and the silver. So again, they've been mining zinc and they've been mining silver for a long time in that part of Rajasthan.